Okay, so this is our usual Saturday evening session. Good evening again, everyone. This is 25th of Jan. One more week, and we'll be heading for the end of the first month of the year. And of course, we'll be heading for the derivatives expiry. Markets have been choppy, and I sense it will stay that way for some more time to come. But our weekend session, we focus first on the weekly charts of the index. It might look a little cluttered because it's got quite a bit of stuff, tools going on. A nice couple of Fibonacci confluences of retracements and projections, giving us some sense of where can be the downside projections or targets, if you may call them. We are in a multi-legged correction. You can call it A, B, C, D, whatever you feel like, but it is definitely multi-legged, something we have not seen for quite some time. From a high to low basis, the Nifty spot is down around 12.5%, and it's been around 17 bars, 17 weeks. The top was on the 23rd of September, so October, November, December, Jan. So you're looking at 4 good months of steady weakness corrections. The immediate levels on the downside is between 22,400, 22,600, and then I have 21,400, 21,600, etc., etc. But this level looks more probable if the weakness selling continues. Quick look at the momentum indicators, the RSIs and all are not suggesting anything significant. Taking a look at the daily time frame, something's bothering my left eye. Maybe the downtrend of the Nifty. Nevertheless, the daily time frame has been going through consolidations, 4 or 5 days of consolidation, quickly opening up on the downside. Now again going through a 3-day consolidation. And all this while, whenever the market consolidates like this, all that you will get is ups and downs and choppiness. Not ideal situation for any short-term momentum trader who takes positions in the market. I'm not talking about intraday traders. But, as I was saying, the market needs to show us, and when I say us, I am, including everyone who takes decision based on prices, that the market needs to give us something based on which we will at least feel and sound a little bullish. And the Heiken-Ashi is far away from any positivity whatsoever. Our momentum indicators are kind of struggling. So honestly, there's none. And we spoke about this, what is it called? Bullish Harami pattern, the baby candle. But if you remember very clearly, we mentioned that this level is very important. And then we saw an outside bar on Friday. That was yesterday. If you are a trader, if you have been trading for some time, you would have found it difficult. I can understand. And it's going to be that way. In terms of levels, nothing doing positive unless the market, attempts and stays above this particular bar. This is the bar which marked the recent selling. The recent selling came from this day. Date-wise, it's the 21st of Jan. So 21st of Jan's high is important. If the lows gets breached, then of course, the entire movement, entire drift will take it forward, further down. And we have a 22,400, 22,600 zone wherein we can expect something. So that will take us towards a 15-16% correction on a high to low basis. So strategy from the Nifty is predominantly bearish. Do not go overboard looking for shorts if you're a derivatives trader. Look for specific setups. Is it a time to go long? There's nothing that Nifty is giving us. So once it starts to give us some bullish reading signals, we will sound bullish, right? That's the Nifty. The next template that I have over here is that of the mid and small caps and the broader markets. We will take a look at the weekly first. So on the left hand side, I have the CNX 500. The middle one is the mid cap, and the right hand side, I have the small cap index. So clearly, first I'm going to take a look at the candlesticks. Not good, not good, not good. Again, very clear, and it's very, very, clear cut when it comes to the candlestick patterns. It's a bearish engulfing kind of a pattern on the last 2 weeks, which makes it not a bearish engulfing, which makes it maybe a last engulfing question mark. And for that, this high has to be taken out, which means very clear. If you want to look for any longs, then I will strongly suggest and request, unless last week's high is crossed, don't even think about it. Unnecessary. Okay. On the other hand, if you want to go with specific sectors or stocks, then I will strongly suggest look for those sectors and stocks which are trading above 21st Jan's high. Those which have managed to scale above 21st Jan's high. That was the last sell-off day. Candlesticks, looking at the Heiken, not good. Nothing on the Heiken also. Momentum indicator is nothing. So the broader markets are all drifting down, and it's clearly on the downside. Coming to the Bank Nifty, the finance, Bank Nifty, finance, private banks, and PSU Bank. We will take a look at the weekly time frame. This is the weekly time frame, and what do you have? 2 bars of consolidation, a little bit of a yin-yang kind of a setup of a pattern. So essentially, what I can see all these 4 charts have managed to do is take a breather after the directional move. See, I can take the example of Bank Nifty to explain this to you. This is the Bank Nifty candlestick. Sell-off week, 2 weeks consolidation, choppiness, volatility. Sell-off week, 2 weeks of consolidation, choppiness, volatility. Same thing you will notice in the finance, in the private sector, and to a lot of extent in the PSU. So what the charts are doing on the weekly time frame for all 4 of them is consolidation within a tight range, and that's why the choppiness and volatility. Of course, the earnings seasons is fueling the volatility and gap ups and gap downs, but essentially the drift is down. And out of all these 4, the PSU Bank pack had been correcting earlier. It had started to drift down earlier, and so it might start to stabilize the momentum. It might. Is there any positive signs? Not really. Okay. Stock specific behavior out of the earnings is a common phenomenon nowadays. It can be on the upside or on the gap or on the downside. It's not leading any significant to the sector or the overall markets. So we've seen Kotak Bank's gap up. We have seen how Axis Bank had come down. We'll soon see SBI. So we've seen the gap up of Reliance and the gap down of Infosys. Index kahin ka kahin nahi ja raha. Index is struggling. Before we move on to any specific sectors, I'm going to first take a look at all the 8 sectors at a time, and then I'll take up one at a time, right? So as you will know, I take a look at 8 sectors in a clockwise manner, starting from the CNX IT, energy. So after the banks, finance, the next most heaviest sector, important sector is your IT, then you move to energy, FMCG, auto, and likewise we will finish with the reality. Now this might, of course, I do not blame you, this might, of course, feel too overwhelming for you. At times it's overwhelming for me also. So I step back and read the charts slowly. IT, this is a bullish Harami kind of a pattern on the candlestick. Essentially, last week it consolidated the week before's correction. Momentum is down. Any breakdown of last week will only open up gates on the downside. Is it it's midway, it's 50-50 IT. Energy consolidating for 2 weeks. We have back-to-back couple of green HAGBs which should try and help the index at least give us a bounce back. Energy, there can be some signs of a short-term bounce back. There can be. Reliance has moved up. We need to see how the others. ONGC had done well. We have to see how the OMCs, the Coal India and etc. plays out. FMCG struggling, range bound activity. Clearly, momentum not that great. Nothing great. Honestly, no. Auto opening up a bit last week. Not good. Pharma forming a 3-week correction which is taking it back to the previous lows, which calls for a breakdown. Trend momentum on the downside. Again, not good. As of now, the only sign of a prospective bottoming out is, as of now, we've seen on the CNX energy. Metal, very tricky. Make or break. This week's range is important for next week. Make or break for this guy. Consumer durables, all of a sudden it was holding so well 4 weeks back. It did give a meaningful bounce back and then it just opened up drastically on the downside with Dixon, Havells, etc. Again, opening another leg on the downside, not good. And then finally, Realty's close was at the lowest point of the week. So one look at the 8 sectors together and I can see from the slightly contrarian bullish point of view, energy has some merit, IT also 50-50, metal make or break. I think IT and metal, I will say make or break, and energy a revival. The only difference between these three we need to understand, IT is a predominantly strong chart which can give us a follow through move. So that's the best in terms of relative strength. When it comes to energy and metals, they are both downtrend. Energy has come off quite a bit and it's from a contrarian point of view. It can give us a short term, maybe a couple of weeks bounce back, maybe. And the same goes for metals. But metals is make or break. Energy is not make or break. I will not be looking to short energy stocks. But if metals breaks below last week's low, it's high chance it might open further grounds. So metals is make or break. Energy probably will find a selling slowdown. IT is also make or break. If IT breaks, that's not good news. All eyes should be on the top stocks which enjoys the weightage. Right? I will just quickly for the next few minutes look at the same thing in a much more spread out manner with the weekly, daily, because the view that I got from all the 8 charts together, I would like to see if any of these charts, let's say I want to spend a little time on the energy. This was my weekly chart and this is what was this HAGB probably can offer us a bounce. I want to check, will the daily offer anything like that or not? And the answer is very tricky, interesting. We have to take energy one day at a time. For example, there is a conflict between the trend and the momentum, which makes life difficult. It will be choppy. If this anticipation has to go right, or should I say, there's a wrong way to say it, right and wrong. If I say if energy stocks, if the CNX energy does really manage a bounce, then I have to take it one day at a time. For example, the first thing that I would like to see is a move above Friday's high. Friday's close was not good. So there's a hint, but there are no confirmed signals. There's a hint. It may not play out. Finance, FMCG, it's choppy, very wide range. IT stocks went up really fast and this is the zone that the CNX IT is now going to knock. So erstwhile zone which gave you support is likely to act as some bit of resistance. Keep an eye on Infosys. Metals, as I told you, is a make or break from the weekly, and the daily is also. Tata Steel could not sustain. We saw that move coming in yesterday. Make or break, Tata Steel can support it can work. Let's see. CNX Pharma, PSU Bank, as we did take a look at reality, also pretty weak. Private sector banks, as you can see, is, you will see these kind of charts which will form something like, which I like to call it a falling wedge kind of a shape on a downtrending market. So essentially what it does, it will break the lows and chop you out and then probably reverse. What I can say is, going forward, also adding the extra expiry week ahead, it's not going to be easy next week either. Strategy wise, it's going to be no change. Best would be, to keep a low profile and trade as less as possible. This is not the best of times to make probably the time where you can sustain or not lose much if you're a short-term momentum trader. If you're an intraday trader, every day is the same for you. And if you're a positional long-only investor trader, then in that case, yes, do your homework and your approach should be staggered, because you don't know how far this market can take you down. Taking a look at the global markets, the Dow Jones decided to cool off a little bit with 140 points, had a great move just when the weekly charts had one leg down and just bouncing back. And I was just thinking, oh, will the Dow Jones and the US market also give us an ABC kind of a move on the downside, just like the Nifty? It just decided, no, we are going up. So it's still enjoying Trump taking charge of the chair and all the signings and all the noise that he's going to make, all the drama that's going to come up. So US markets charts are looking much more stronger. The Nasdaq also looking strong, and S&P 500 did touch a new life high. Look at the way it has bounced. Will the Nifty move like this? As of now, there are no signs, right? So Dow Jones, Nasdaq and S&P 500 strong. But what about the dollar index? Because the dollar index after a long time has given a meaningful down leg. And it's around 107 now. We've got used to looking at it above 108, 109, almost touching 110, but now it's around 107.5. The last time it corrected on the weekly chart was down here, and this is yet another short-term correction. Are there any convincing signs of a downtrend? No, but this should help the USD INR, which is around 86. Okay, nothing great on the weekly charts, but it seems like the USD INR is buying some time and it's consolidating. Some will say it's a flag pattern. Some will say that it will give you a breakout after the flag, but I seriously doubt, because flags do not form after such a significant rally. What I can see is there's a bit of a slowdown of momentum, and it's going to probably stay a bit more range bound before it starts to come off. So kind of good / positive news from the dollar and the dollar index point of view. Crude, which had broken out, has also decided to cool off. So this also should taper down a bit of the inflation. If it leads to inflationary concerns or not. I don't think so. It's going to happen right away. We have to keep an eye on these macroeconomic parameters for at least a quarter, for at least Jan', Feb, March. I hope you do that on a continuous basis. But at the current juncture, we need to be aware of what can go wrong for the market. Anything, when you are very fragile, any small prick can cause a lot of pain. So we are kind of fragile. It's not a lot of bullish talks happening. We are down almost 13%, and any little negativity here and there can trigger further weakness. Okay? So with this, I'm going to end our usual Nifty and the sectoral analysis. Now, like every Saturday class, I'm going to take a look at your doubts and questions.